Inflation continues to rise, hitting records not seen in 40 years. That's why the Federal Reserve is striking back, hiking interest rates by 0.5%. According to NBC News, it's the largest leap in more than 20 years. Now consumers and investors are preparing to dig deeper in their pockets or bow out. But could rising interest rates help the market over time? 13 News' Cassandra Brettel sat down with a local financial advisor about how you can prepare for your financial future. Cassandra.
Brittany, experts at Savant Wealth Management in Rockford say the price jump from the Fed was not a surprise, but the ripple effects could be, especially for those already in need of financial relief. A 0.5% bump in federal interest rates means the overall rate will now sit in the 0.75 to 1% range. And with inflation taking up much of the budget, the dent is growing bigger.
You're increasing the cost for consumers to borrow money for cars or mortgages. So what they're looking to do is potentially slow the rate of spending in the economy to potentially lower the inflation levels going forward.
For those looking to buy a home, finance a mortgage, or buy a car now, it's a double whammy. Supply is low, causing prices to go up. And now with interest rates rising, the costs will likely get even higher.
It's definitely something where people are facing the question of, well, do I pay cash for something as opposed to financing? Well, that's great if you have the cash to do it, but not everybody has cash to spend.
But financial advisor Jeff Lewis says Americans have been in worse situations before, and it's better to focus on the things you can control.
Increases in interest rates are going to affect everyone. So what I've been, telling a lot of my clients and working on is maybe just sitting down, revising what kind of debt do you have out there? Do you have a mortgage? Do you have a car loan? Do you have credit card debt? And really prioritizing which one should I be paying off first if the interest rates are going to be increasing.
Lewis says he anticipates more hikes from the Federal Reserve this year, but hopes it'll be a slow climb so consumers can budget accordingly. And Lewis also says the end to those interest rate hikes all depends on if inflation does reduce and to what level. He also says for those on a home buying journey, a 6% interest rate on a mortgage right now is still a bargain when considering 40 years ago it was about 20%. For 13 News, I'm Cassandra Brettel.